Welcome to the fifth installment in Trading Strategy Guide's Trading Education series. The game of trading is a bit like poker. Your job is to figure out what the other players or market participants are thinking. Stay around and I'll go into a bit more detail. Hi, this is Tim from Trading Strategy Guides. Thanks for coming back for this installment of our Trading Education series. The game of trading is about mindset. Not only your mindset, but that of your opponents as well. Your opponents are the players or market participants against whom you are trading. The difference between trading and poker is you have to understand your opponent's mindset without being able to look them in the eye. So how do you go about doing that? Well, by reading the tape and understanding the order flow. You analyze the price movement executed by the players to determine what they are doing and thereby what they are thinking. The main goal is to understand how the other players make their trading decisions and how they execute their trades. Focus on analyzing the market context because this is the most crucial element if you want to step up your trading game plan. Statistics have shown time and time again that the majority of traders lose money. So if you can learn how this particular group of traders think and trade, that is how you become a successful trader, by finding that statistical edge that allows you to win. Why is viewing the marketplace through the eyes of the other players so important to your success? If you can't think objectively about the market forces, the supply and demand forces that drive price movement, you'll never understand how the market really works. Success in poker is about understanding the other players. Likewise, the game of trading goes beyond the price action. It's an effort to understand the other market players. We've discussed how buy and sell orders or supply and demand are what moves the price. Well, who executes the orders? Well, the traders do, right? That makes it extremely important to view the market in terms of what other traders are thinking and in terms of their worst fears and their greed. Let's put the order flow mindset to a test. When you buy any security, in order to make a profit, you need other market participants to buy after your entry point. If there are enough aggressive buyers to consume the supply side, the price will move up. The conclusion is that you need other traders to form a bullish bias and that they need to buy or go long for the market to move in your direction. And the inverse is true as well. When you sell any security, in order to make a profit, you need other market participants to sell after your entry point. If there are enough aggressive sellers to consume the demand side, the market will move down. The conclusion is that you need other traders to form a bearish bias and that they need to go short for the market to move in your direction. To trade effectively, your analysis should focus on what other market players are thinking. You need to know why and how the other market participants make their trading decisions. Identify price areas on a chart where the other market players are most likely to buy and sell, and a new horizon of trading opportunities will emerge. In other words, you need to do the following things. Number one, identify price zones where other market participants, especially retail traders, will buy after you. Number two, identify price zones where other market participants, especially retail traders, will sell after you. And number three, identify price zones where other traders will place their stop loss. The price is a representation of human behavior. A mentor of mine used to tell me that the candles on a price chart are the footprints of money. Well, what does that even mean? It means that the price is based on the sentiment of the majority of market participants. Because it's based on human psychology and emotions like fear and greed, the price is not a complete representation of the fair value. So an analysis of what the price should be, based upon market fundamentals, doesn't tell the whole story. So we have to use the game of trading, an order flow mindset, to analyze human behavior. And what does that even mean? Well, it's sometimes said that all markets will continue to move in the direction where it can cause the maximum amount of pain to the majority of the traders. So, in what situation do traders feel the greatest amount of pain? Well, firstly, when their trades are in the negative and they suffer a drawdown. At some point, they are going to reach a maximum pain threshold when they will need to accept that they are wrong and liquidate their position. In other words, I like to say that's the point where they cry uncle and shut it all down. Secondly, when their trades are in profits, but the market moves against them. At some point, they are going to reach a maximum pain threshold here when they are forced to accept their trade is no longer valid and liquidate their position before they lose even more of what they've earned. Knowing this valuable information, you can now act upon this pain factor and aim to target those prices that will cause the maximum amount of pain. When the maximum amount of pain is reached, it will release order flow or liquidity that many of the big players seek to target. Let's take a look at a practical example. Here is an example of how you can judge the price action from an order flow perspective. Due likely to some news event, the price drops like a rock right here and forms an intraday support level. This huge down move will surely attract some sellers. Price then tries to recover, but eventually the aggressive sellers take over and you see a downtrend form. Once the prior intraday support level is broken at point A, you can see another wave of selling pressure triggered as breakout traders enter the market. As the price moves further down, indicator-based traders will also get their short entry signal, maybe around point B. And that's usually after the breakout due to the lagging nature of technical indicators. Obviously, the later all these market players enter the market, the less profit margin they will have. Now, as the price is headed into this historical support level at point C, we can expect to begin to attract bullish order flow, especially if this move is within the context of a longer-term bullish trend. The current market supply can be consumed easily by the big buyers. At this point, we can't know for sure if the market is going to continue down or if the demand side or buyers will overwhelm the supply side or sellers and the price will reverse. So we let the price unfold, and once the market turns, we can now understand how these sellers will react once their maximum pain threshold is reached. In this chart, we can see the outcome as the buyers stepped into the market. Now, as the price progresses upwards, we can also see these sellers start to feel the pain of the market going against them. And once they're in a drawdown, they will be forced to liquidate their position using buy orders, which will further reinforce the demand side and help the market push higher. The real game of trading is to view the market through the eyes of other market participants. Their trading decisions will help you understand the market more comprehensively. With an order flow mindset, from now on you'll base your own trading decisions on other players' decisions and how they trade. To put it simply, your job in this new understanding of the market is to execute your trades based on the decision-making process of other traders, or more precisely, the decision-making process of losing traders. The game of trading is all about creating and narrating a story behind the price action, and the more you practice, the sooner you'll become an astute trader. That wraps it up for this video. Don't miss our next installment in the Trading Education series next Wednesday, where we'll discuss what is the currency market. And of course, be sure to catch my Trading Picks videos on Friday and Monday of every week. Also, be sure to subscribe and hit the bell so you'll be notified when these videos come out. Have a great Wednesday, and I'll see you on Friday.